PantheonAI presents Intel's Foundry Future in Doubt, Trump hints Fed rate cuts, AI spending boom accelerates. Welcome back to the PAI Morning Briefing. I'm John, and it's a beautiful July 25th, 2025, a great morning to talk money.
And I'm Sarah. It feels like the market is in a holding pattern, John. What are the numbers telling us today?
You've nailed it. We're seeing pretty narrow trading bands. The S&P 500 is up just a touch, about 0.27%, sitting at 63.87. The Dow is even quieter, up about 0.1%.
Right, not exactly headline-making stuff. But I guess in times like these, stability isn't a bad thing. Any life over in the tech space with the NASDAQ?
A little more action there, as usual. The NASDAQ's up about 0.43%. But Sarah, the real roller coaster is where it always is, in crypto.
Oh, let me guess. It's a sea of red today?
You got it. Bitcoin's down around 2.35%, trading at about 115,000. Ethereum is seeing a similar drop. It's that classic crypto double-edged sword. High risk, but also high opportunity for those who can stomach the swings.
It's such a fascinating split, isn't it? You have this cautious stability in traditional stocks, and then absolute turbulence in crypto. It feels like the market has a split personality right now.
Exactly. And even within the stock market, it's complex. The big indexes look calm, but individual sectors are telling a different story. Tech, for example, is all over the place, especially with the buzz around AI spending and, of course, Intel's latest earnings.
We are definitely going to have to dive into that Intel news. It seems to be causing a lot of debate. But it's interesting how that contrasts with sectors like energy and finance, which seem a bit more resilient, right?
That's a great point. You even see it in the new durable goods report, which shows business investment is holding up surprisingly well. It makes you wonder if we're seeing a real divergence between sectors or if this is just a temporary blip.
You know, it reminds me of that old saying, even a small leak can sink a great ship. These tiny percentage shifts and individual company stories feel small, but they can ripple through an entire portfolio. Every point matters.
So true. Well, let's get into those big stories causing the ripples. First up is the one you mentioned, Intel. The headline everywhere is, Intel earnings bring more questions than answers.
And the big question seems to be about their foundry business. The chatter is that they hinted at a willingness to cut it. For listeners who aren't deep in the chip world, what does that actually mean?
Well, it means they might stop manufacturing chips for other companies and focus more on their own designs. It's a massive strategic pivot if it happens. Some analysts think a leaner Intel could be stronger, but others are worried about what it means for their place in the market right now.
Okay, so a lot of uncertainty there. What's the next big story catching your eye?
This one's a fascinating mix of tech, politics, and, well, job security. The headline is, How You Can Keep Your Job as Trump and Google Propel AI Spending.
Wow, that's a loaded headline. So it's connecting the AI spending boom directly to political figures and big tech, and then tying it back to the workforce. It's not just about innovation, it's about disruption.
Exactly. The articles even touch on the meme stock craze and trends for home buyers. It's a perfect example of how interconnected everything is now. Politics, social media, technology, and your wallet.
Speaking of politics, there's another headline with Trump's name on it that's making waves, isn't there? Something about the Fed?
Yep, 3 separate reports on this one. Trump says he believes Powell is ready to start lowering rates. He's expressing confidence that the Fed is about to start cutting interest rates.
That's a bold prediction. Especially when you have data like the strong durable goods orders we just mentioned. It suggests business investment is holding up despite high borrowing costs. You always have to take these kinds of statements with a healthy dose of skepticism.
Absolutely. It's speculation until the Fed actually makes a move. But that durable goods report is our final key story today, and it is a reassuring note. It shows the manufacturing sector is staying pretty robust, which is a good sign for underlying business confidence.
So, when you put it all together, a tech giant at a crossroads, political figures weighing in on monetary policy, and solid economic metrics, it really is a complex picture. The big question is, what's real signal and what's just noise?
Let's try to break that down with a closer look at the sectors. In tech, the Intel situation is obviously the main event. This potential pivot away from their foundry business is a huge deal. It raises questions about how legacy giants can stay agile.
It really does. It's almost funny. In this futuristic high-tech world, the biggest question is whether the people in charge are making the right strategic calls. Now, what about the energy sector? It's been quieter.
Very quiet on the surface, but it's still critical to watch. Things like trade policy and stimulus talks will eventually hit energy demand. Plus, that dance between traditional fossil fuels and renewables is always a factor investors are trying to balance.
And I imagine the finance sector is hanging on every word of that interest rate speculation.
Completely. Lower rates can be a mixed bag for banks, squeezing lending margins but stimulating borrowing and economic activity. Financial stocks are basically walking a tightrope right now, where even a rumor can feel like a gust of wind.
And all of this is happening against the backdrop of that huge AI spending push we talked about. It's not just a tech story. It's a story about jobs, society, and how every industry is going to have to adapt.
Which brings us to the global picture. A Fed rate cut doesn't just stay in the U.S., it sends ripples everywhere, affecting global borrowing and emerging markets. An Intel strategy shift impacts global supply chains. It's all connected.
So, if you had to put on your predictor hat, John, what's your take? What should investors be bracing for?
I think we need to be prepared for this pattern to continue. A stable-looking surface with a lot of volatility underneath. The tech sector especially will see some big swings as companies like Intel figure out their next move.
And what about the AI and jobs question? Should people be worried?
The narrative seems to be more about evolution than replacement. New roles will pop up. It's about adapting. I sometimes joke that worrying about AI taking your job is like worrying your toaster is going to get too smart. At the end of the day, it still can't go to the office and ask for a raise.
Ha! That's a good way to put it. Okay, so let's wrap this up with some key takeaways for our listeners. What should they be watching?
First, keep a close eye on Intel. Their next move could reshape the semiconductor market. Second, the AI spending story is much bigger than just tech. Watch how it influences jobs and other sectors.
Right. And third, remember that while the big indexes look steady, the real action is happening at the sector level. And finally, don't forget the global implications of U.S. policy and corporate strategy.
Excellent summary, Sarah. It really leaves us with some big questions to think about. How will you adjust your strategy if rates do get cut? What's the next domino to fall in the tech industry?
Those are the questions that define a smart investment strategy. Thank you for joining us for this deep dive, everyone. Your curiosity is what makes these conversations so valuable.
Indeed. We're proud to be your information copilot, courtesy of PantheonAI. Join us again next time. Until then, keep questioning, keep investing smartly, and have a great day.
PantheonAI, your information copilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.